So silver bullets, you have a fair value gap set up that's very specific in that 60-minute chart or 60-minute time window. 1 hour at 10 o'clock to 11 o'clock. You have the lunch hour that runs on stops. Whoever's been making money, that's what it's going to do. It's going to run down there. Even if it reverses in the lunch hour, that's still a trade also. If you can anticipate that drop down, say the market's been going up, London session, New York session. Now you're entering at 11 o'clock to 1 o'clock an hour. You can sell short a 1 minute 2022 model and aim for that 15-minute low. What? What's wrong with it? Nothing. It might not fit your appetite. It might not feel like it's something for you. Holding you back. Something's holding you back. And then you had the PM session, afternoon, between 2 o'clock and 3 o'clock. The same thing you would expect to happen in 10 o'clock to 11 o'clock. We have to look for stops or inefficiency. Where's the market going? Where's it reaching for? You know, you had that old high that you were aiming for all morning. It didn't get there. We have relative equal highs now across the afternoon. What's it going to reach for? The weekly and daily objective hasn't been met above the marketplace yet. So we're still bullish. Wait for a short-term shift in market structure, 1 minute and 5 minute. Wait for a fair value gap to form between 2 o'clock and 3 o'clock. And then when it drops down into it, when you're bullish, buy it and aim for that intraday high. If it can give you 5 handles, take it there. Leave a runner on and see if you can get to that higher time frame, weekly or daily chart. That's how you trade your afternoon silver bullet. Simple. Real simple. Then you have the last hour trading, 3 o'clock to 4 o'clock. And now we're talking about the extreme of the daily range for indices. But as an index trader, you're entering the lunch hour. Now you roll out of, say you're a Forex trader, and you want to trade the London session and New York session for Forex. And now you know that Forex goes a little bit colder the rest of the day in the US hours. Stop trading Forex, roll over into indices. Trade the lunch hour. Where's the 15-minute stop? Where's the stops? Who's made money? Where are they leaving their stop? Because it's resting right in the marketplace, and the algorithm will gladly go down to it or go up to it, and there it is. There's a setup there. We get that last hour. That's making the high or low of the day for index futures. Not all the time, most of the time. Unless it reaches the daily or weekly objective intraday, and that will be the high or low of the day. If it has done that, then the afternoon last hour trading has to be traded from a scalper's mindset, looking for a 15-minute high or 15-minute low or 15-minute inefficiency above or below the marketplace. And that's your target, and be content with it. So I've walked you through a daily range, mentioned the characteristics. They're very generic. Do you think about price like that? If you haven't been thinking about price like that, now you should. Because in my mind, the inner musings of the ICT, when I'm watching the daily range form, I have all these thought processes in my mind, and I'm anticipating certain things based on the logic I've showed you and talked about here. I am not surprised. I am not taken back in a gasp when the market does something at any one of these times of the day. I'm expecting all this stuff. But anticipating it and entering the trade is two different things. In the beginning, you need to just sit still and watch. And you desensitize yourself. You remove all the doubt, all the fear, all the trepidation about you being able to do this. Oh, it's rigged, it's fixed, it's fake. He only shows you the winning trades. He this and that, nothing. You have all these excuses that you have to sort out. All that's put to bed when you start seeing it happen over and over and over again. When you start seeing it live, pan out to script, this market is absolutely predictable. But there's times when the market's going to be a little fickle. This is simply going to give you the setups that you like to see. New York session, optimal trade entries. London session, turtle soups that shift into 2022 model or optimal trade entry. Breakers really do well in London. Reversal market profiles in New York session. Once the targets on the weekly and or daily chart is met and reached, All of these individual times of the day, the silver bullets are always continuation. They're continuations of whatever is in motion at the time. If you can't determine what is in motion, don't take the silver bullet. How about that? How's the logic for that? It's simple, isn't it? When in doubt, stay out. I've made it very simple. I've talked about very specific times of the day. That is rule based because the algorithm is going to operate in these hours a very specific manner. And it's going to deliver a price. When you're making money for the first time, that's going to be very scary. And you're going to freeze. And you're going to feel an overwhelming desire just to close the trade. More so than I'm going to hold it and see how much it's going to pay out more. You're going to be fearful of your stop loss. Is it going to go down and hit my stop? And it's probably going to be, a significant distance between where the market is right now while in unrealized profit, and your stop loss would be pretty far away from it. Even if it was to stop you out, it would still be in profit. But you're going to start wrestling with this. Do I get out here? What happens if it goes down to my stop? What happens if it goes down two more ticks? And it does. And then you're thinking, oh no, what do I do? And you're literally going to be arguing with yourself. The whole time you're in unrealized profit, and you're not going to stick to the model. Continues and goes for your target. It's okay because you were part of that trade and you still took a large portion out and you removed yourself from that emotional turmoil. Because if you stay in that state of mind while you're trading, you can't effectively manage risk. You cannot effectively manage the trade, and you're worrying about the what if instead of worrying about what is. Is the market showing me that it's still on the right side? Is order flow still confirming? If I'm bullish, is to do down close candles support price? If it goes into the down close candles, is it going past the 50% mean threshold? If it does and starts closing below that, they're warning signs. Doesn't mean completely bail on the trade. It just means, okay, what's the next two PD arrays below that? If I'm bullish and I'm long, is price not being supported by down close candles? If that happens to not be true, then and only then, you don't worry about it. You close the trade and you're happy with it. Be content with that. And you'll see many times that you did the right thing. But you can't appreciate what I just said until you go through back testing and then do tape reading and then do demo trading. And you've been there. You've seen it. You've experienced it. Now you understand it and see it before it happens. You anticipate it. But if you're trying to just jump over top of all that stuff and go into live fund trading or getting past with a funded account and trying to be able to trade a funded account and get withdrawals and payouts by these companies and not know what you're doing, you're going to fail. And you won't understand why you're failing, which will also be a great deal of negative impact in how you think about trading, how you think about yourself as a trader. All those things are going to be paramount to what you do in the next set of trades. And it's going to create nervousness, anxiety, and you'll have fear of getting into a trade. It'll completely lock you down. And you may have just made money. But being in a trade that's making you money and not understanding what it's like to be in that position, it's a scary feeling. And the only reason why that occurs, and the answer to that solution being found in back testing, condition yourself seeing it, then tape reading, looking for it without pushing the button, getting bored with how many times you're able to see it, and then venturing in slowly with demo trading for months. And you absolutely cannot take yourself and I'm going to shortcut it and skip all that part. You can't do it. So hopefully I've given you a ability to focus in on specific times of the day, time-based setups and models that you can employ and use these as a rule-based idea going into the 24-hour trading day and find your unique model to start with.